There were 684 new insider trades last week, almost all of them totally useless, but we looked through them all to find those unusual and abnormal insider trades that could be high signal and help us outperform. Let's take a look. Starting with a quick look at the weekly data here, we can see a relatively lower number of trades coming in, which is to be expected. Again, as we enter into earnings season, we're going to see fewer and fewer trades, and it's going to probably start to sit under that 100 total trades mark here pretty soon, and a large portion of them will be scheduled sales or tax sales and that kind of thing, which obviously not very interesting. A pretty flat week. We're just kind of on a roll here of having the exact same 14% of insider trades that are buys, which, slightly below the long-term average there of 21%, but nothing really to be too worried about, as there's quite a few periods of time where we sat around this same level, and it's not really an indication of lower or a more bearish sentiment here. Nothing to be really concerned about there. A pretty normal week, I would say, of insider trading. Heading over to CEOWatcher.com, we can go take a look through October 6th or October 10th. We'll look at the bullish returns. Let's take a look at purchases, and let's just sort by transaction value and take a look to see if we can find anything interesting here. So right at the top, we've got BGC Group, which, it looks like this is one thing to take note of, and one thing that we do filter out when looking at kind of on the back end when I'm looking at all the trades and stuff, is that these 3 trades are all the same trade, actually. Brandon Lutnick, which we can go take a look here real quick, and we can kind of see how these are formed. But this is, this can throw people off. And so in our weekly calculations and stuff, when we're calculating, the total number of buys or the total percentage of trades that are buys or all that kind of stuff, we don't triple count these, right? We count them just for one, which if we look at Brandon Lutnick, so he's the chairman at Cantor Fitzgerald, which, let's see, the reporting person through trust, which he is the trustee with decision-making control, close the purchase of all voting shares. So you can kind of see how it is here, where Brandon Lutnick, who is, like we mentioned, is the chairman, but he is the trustee with decision-making controls over CF Group Management, which is one of these other ones. This one. So Brandon Lutnick, controls this, and then this group is a managing partner here, a managing general partner of Cantor Fitzgerald LP. So because of this, they're all basically just public. Basically, they're all required to do their own filings. And so because of that, even though this is all one filing, each of these entities has to repeat the filing. So that's why you get 3 filings, and you'll see this pretty often in situations like this, or in situations where somebody might be a director at a company, but then they also work for a hedge fund. And so then in that case, or any kind of fund really, in that case, the fund and the director themselves will both have to report it, but it's just the same trade, right? And then also in this case, we want to verify what's actually going on here, which, I guess you could have your own opinions about how you feel about this. Is it's literally just Howard Lutnick selling his shares to his son, which you'd have to go in and see what exactly is going on for like tax purposes and stuff. But in this case, Howard Lutnick's at the government. He's supposed to divest his shares. So I guess, one way to divest your shares is just sell them to your son. I don't know if that should really count, but that's what appears to go happen here. So the BGC Group, even though it's the largest purchase of the week, is simply not interesting, and it's actually just, Howard selling to his son. So pretty easy to skip past that. Next, we have another pretty big purchase, an $18 million purchase by an individual who happens to be a director. So in this case, we've got at Scholar Rock Holding here, $18 million is actually pretty sizable, and we haven't been seeing all that many large insider purchases. So it is kind of nice to see one of those sneak through here. So taking a look here, we can see not really any insider trading at all at Scholar Rock here recently. Maybe a handful of pretty small $100,000, $30,000 sales, but this is going to be the first purchase in really a long time, in almost 2 years, all the way back to 2023 when we had Invest Public Equity and this same guy who probably, in this case, I don't know why Samsara BioCapital didn't have to report. I'm guessing that's who this guy's through though. Yeah, so he's part of Samsara. So, in this case, I'm not 100% sure why Samsara didn't report. What actually might be happening is we do actually try to filter these out most of the time. So we might have just actually, filtered this one out properly, and we weren't quite able to filter out the other two because it's pretty hard to properly match up the individual with the hedge fund or the entity. So in this case, we might have just filtered it out. But anyways, this guy works at Samsara, and they have now purchased a large stake here in Scholar Rock Holding. I mean, they already had a purchase. They increased their their position by 20%. If we go look at historically at this guy's returns over here, we can take a look back further. We can see he bought pretty well timed down here at the end of 2023. Looks like he also sold right here, right after a pop of what, presumably was some good trial results here. Sold a pop there. So it is interesting that they took some chips off the table here about a year ago after this pop, and then about a year ago, just over a year ago after the pop, but then are now buying again, slightly higher. So it looks like maybe they have some faith, now that maybe they didn't have then. And then if we also look, also is on the board of a handful of other therapeutics companies. Looks like, so in this case, here's one other difference is in this case, this one's almost certainly part of a public offering at Mineralys Therapeutics. Let's see if it'll tell us here. Completes enrollment, presents subgroup analysis. Yeah, here we go. Announces the closing of an upsized public offering. So in this case, which those are less interesting. Public offerings, especially after good readouts, we're not nearly as interested in as in this case. It does not look like this was part of a public offering. It just looks kind of like a discretionary buy, which we can also just verify. If we look at all these different prices, this would also hint that this is not, some sort of prearranged purchase or something. These appear to be open market purchases. Maybe slightly below what the price is right now, which it does look like, it did hit over the period where they would have been buying. So about a 50% win rate, so not the greatest win rate in the world. But if we look at the buys here over the time periods we tend to look at, 1 year, 66%, 30%, 20%, 6%, all very good, only about a 1/3 win rate. So, not the best win rate, a little bit on the riskier side, which is kind of to be expected in biotech land, but very, very good return. So overall, this is a pretty high quality insider purchase. Solely, strictly speaking about the insider buying signal here, I'd put this pretty high, rank this pretty high. So if we go take a look at what's going on there to see if we can find any news or anything about what exactly the story might be here at Scholar Rock Holdings, up 50% in the last year, which, comes just back here was when that big pop came, and then they got another little one back here for whatever reason. Could you figure out, but I don't think it matters that much. Earnings estimates don't really matter that much as they're not really clinical stage now. Or they're probably still considered clinical stage because I don't think they've started manufacturing the drug, which is kind of what we'll figure out here, but they're still pretty early, so they're not going to have any earnings or anything yet. What do we see here? So we can start to see Scholar Rock faces FDA setback on SMA drug due to manufacturing site issues. So this is kind of a delay, which this is an interesting one because generally speaking, when the US, when the FDA puts out a CRL basically saying like, hey, your drug can't go forward, that's a big negative. In this case, it actually just has to do with issues at the manufacturing site run by Catalent, Indiana. And then it doesn't actually have anything to do with the drug, which is why, so Scholar Rock's drug approval is still likely despite delay is what Wedbush is saying. So it looks like we're going to get delayed. I think if you read through these, the estimates are somewhere from like 6 months to 12 months that we're going to see some delays here, which obviously is a negative because the company, if we read through some transcripts, they only have money through 2027, I believe they say somewhere. Well, it doesn't matter. Yeah, here we go. Financial runway into 2027, which obviously they were supposed to start manufacturing right now, which on the last earnings call, they still thought they were going to. If we look somewhere in here, where does it tell us? Somewhere, maybe down here. FDA approval, not what we want. EMA approval, not what we care about. Either way, somewhere in here, they're basically supposed to start the manufacturing process, or they were hoping to get the FDA approval, in September, and then they'd be able to start the manufacturing process. So now this is getting pushed out somewhere into 2026, probably, which definitely raises the concern about them having to do another offering or something and raise some money, which obviously would be a negative. But in this case, we're seeing quite a few handful of positives here at the company. Obviously, you've got this big insider buying after that news came out about the delays. And on top of that, the news came out and the stock didn't really fall at all. In fact, it actually went up a little bit that day. Maybe because investors believe that the FDA is actually going to approve the drug because, they didn't mention any issues with the drug itself. It was just at that manufacturing site. So that's probably maybe why the stock would have went up there. So you're seeing some strength there. Now you're seeing the insider buying. And then on top of this, you have a handful more approvals going on. Oh, here's actually what it was. The FDA approval, working toward a timely approval, was, they're hoping by September 22nd, but then obviously that didn't happen. So they have EMA approval, which is in Europe. That's still coming in mid-2026. They're supposed to be initiating a trial in this trial in Q3. So we'll probably get an update of that on November 7th during their holdings or during their earnings. Then they also have this filing that's expected expected in the second half of this year, which we should probably see some news about soon, which, could be a catalyst. Normally not much happens here unless they're sharing some sort of really early data that could be interesting. So a couple of potential catalysts in the near term, and then obviously the FDA approval stuff 6 to 12 months away is another big catalyst, assuming they match that approval. Same with this EMA approval, that's another catalyst there. So you have quite a few handful of catalysts. I mean, on top of all of that, this, their quarter would have ended in September. This insider buying came in October. So I don't know really, how much insight would this director have really had into earnings. And secondly, how much does earnings really matter when you're not manufacturing anything? But, he does know how the quarter went, and he might have some insight into what they're going to say on their call after their next, after this upcoming earnings, which could be positive. So overall, a lot of this is shaping up to be, maybe nothing's going to happen in the immediate term, no like immediate catalyst that'll cause this stock to shoot up, but a pretty interesting story nonetheless, and some long-term potential there, I think. So that's a pretty good insider buy. Let's move on, see what else we have. A handful of these we talked about. So a lot of these, for whatever reason, we're just seeing fewer and fewer private placements and public offerings and stuff being mentioned in the footnotes, which is kind of annoying. So if you look at something like this one, like Global Water, this one they mentioned, so it's at $10.30. They don't mention anywhere in here that this is part of an offering, but then if you look, you have to look in a few places. So if we look at the news first, right on here, they declare a monthly dividend, so they don't actually say anything there. So they've got a purchase agreement, Mr. Cohn and Mr. Levine, as part of whatever this Levine investment partnerships. Let's go see who we've got. Oh, look, Cohn and Levine buying the stock. So part of a private placement agreement, which I wonder what they got the stock for, about what the stock was already at anyway. So in that case, like, it could be interesting, but generally speaking, just historically looking back at data, insiders, especially, I don't know, were these guys directors? Yeah, so they're directors at least in this case, but any sort of private placement, public offering, that kind of thing doesn't historically correlate by itself, at least with better returns. And also if they're 10% owners, that also is another negative. 10% owners have the least signal compared to directors and executives, but in this case they are actually directors. But a few things that give you a hint that some of these are going to be public offerings or purchase agreements or something like that is multiple insiders buying at the same price. So this is going to be 1030. So they're all buying at the same price. And then secondly, the prices are very even. Normally speaking, when you're trying to buy huge chunks of stock in the open market, you're not going to be able to just get like such a nice even price. Now 1030 is actually not that weird of a price, but a lot of times you might see this be exactly 10 or exactly $11 or whatever. And that will give you a sense there too. And then obviously you just have to go look at the filings, look at the news to see, okay, this was, a private placement for whatever reason, which, maybe you'll still decide you think it's interesting, but I tend to just avoid purchase agreements like this, or at least downgrade them in terms of my interest. And then since I'm trying to look through all the insider trades, I typically just skip over those to try to find some better ones, some ones that are maybe a little easier. Another case here, we've got this Zenas Biopharma is going to be a similar situation where in this case, they actually don't, again, so $19, you can see it's a very even price. Now they did have multiple people buying. You've got Fairmount Funds here, you've got this Leon guy down here, but they actually end up paying different prices. So it's kind of an unusual. So this guy had to pay $20.85, but this one does tell you, I believe, entered into a securities purchase agreement. So we were able to get it here, purchase agreement. But this one, they don't tell us anything. They don't tell us it's a purchase agreement or anything like that. But we know for certain this is some sort of private placement, some sort of purchase agreement, because again, the chance of you getting 316,000 shares at exactly $19 is pretty slim. But then even more than all that, you got it at $19 and the stock is closed yesterday at $27.76. So look, if anybody's offering you 30% discounts on stocks, then you should take it. But in this case, I guess we don't get such friendly discounts there. So not much for us to do with that one either. Saba Capital Management, we've looked at them a ton, buying a ton of Ace of Gold here. Took a 2-week break there and then started buying again now, which I would be kind of interested. Gold's obviously been on a tear. So they've done a great job. Saba Capital's done a great job buying the stock. Obviously, it's up 40% or something since they started buying down here. But interesting to see them resume again after, the stock went up another 10% or whatever it was. They then turned it back on and started buying some more. So still have some faith in the gold, it looks like Saba does. Now moving on to ATYR here. I don't know, ATYR, whatever they're trying to call themselves. We've got a director here buying the stock. Let's go look in. We've got a ton of biotech recently, which is, not always our favorite thing to pay attention to, but kind of you got to take what you're given in insider trading land. And in this case, we've got a director buying, 90% holdings increase, $900,000 of the stock here, with the stock obviously a huge dip here, which this is certainly due to them failing some sort of drug trial, which we can see they failed a drug trial here. So it fell 80%. Now, this is a setup that we just saw recently with Cassava Sciences, which is why this is interesting, but it is weird that this is the second time now. I mean, you don't normally see much insider buying after these drugs getting hit like this. The stock fell from 6 all the way down to 60 or whatever. And then now over the last month or something, not even the last month, over like the last week, it's now up 30, 40%, whatever it is, or 2 weeks, I guess. So now we're starting to see the stock, it's easier to see if we look over here. We're starting to see the stock curl up a smidge from down here, obviously. So starting to see it curl up a smidge. We've got this insider buying too, and pretty, decent size, 900K, 90% holding increase, which is certainly notable, a sizable amount. And large percent holding increases like this are definitely notable when you're looking at insider buying specifically. If we look historically how his trades have worked out, they're not actually all that great. Not very good here, not very good here, not very good here, not very good here, fine here, not great, not great, not great. So overall, and then we'll see the same thing here, just a bunch of red. So overall, this director's insider trades themselves, not actually very high signal, unlike the ones we saw at Scholar Rock, which were very high signal insider trades just by themselves. The only reason we find this one interesting is solely because it kind of lines up with what we saw at Cassava Sciences, which is a pretty popular biotech stock that gets hit, misses their earnings and gets massively hit, and then starts to curl up and you see insider buying. That could just lead to some positive momentum. And then again, in these biotech world, you don't really, most of the gains and losses come, at least in the clinical stage, off of big news releases for the trials. Most of the main negative and positive, but really the main negative press release has already come out, which is, they failed the trials. They claim maybe there was some secondary benefits there that maybe the FDA approved to let them tackle some of this secondary benefit stuff. Seems like they're grasping at straws a little bit there, but for the most part, there's not much else coming out that's going to make this stock like pop or hit huge dips, in the near future. You might see some activists get involved, maybe try to sell the company. That could be a positive. You might see them, spin something about how they're able to use their drug for some of the secondary benefits. That might get something, or you just might, similar to Cassava here, you might just see the stock start to rise for no real reason except that investors kind of like to buy the dip, and then the momentum kind of takes care of itself, just that self-reinforcement of more people buying leading to more people that pay attention to, technicals or quants or that kind of thing. You start to see more people buying again. So we can see with Cassava here, where this was a very, very popular stock, fell however much this was, 80% or something, from 22 or from 30 down to 4, and then continued to die down all the way down to about $1 something. But then now it's up over 200% since then. And then what we'll notice here in somewhat of a similarity is this jump right here was a 50% jump that came about when the CEO made a purchase. And so the stock jumped up, but then it even with the stock down 8% today, the stock is up another about 18% or whatever it is since the close of the CEO purchase here. So that's a pretty interesting setup. And then you can compare it, kind of with A2IR, which we were just looking at, which is, huge drop, things fell, now starting to head in the right direction. The insider bought, you got a little bit of an 8% jump today on that buying. Do we see a repeat here? Obviously it's not the CEO, maybe not as compelling, but that's kind of would be the play here, is you're just playing this momentum recovery to look something like what happened at Cassava Sciences. It's a very specific type of play, not a super long-term hold. It's not like quality company or anything like that, just purely a momentum play. And will you start to see this? Are you just going to, see this momentum play out and the stock continue to rise? Give some shades of what happened at Cassava Sciences, which makes it kind of interesting. Another semi-interesting insider purchase, a couple that we can close out on here, would be at CarMax, which again, this company just kind of a disaster, of financials recently. But we are seeing a couple of insiders buying the dip, which just historically, insider dip buying like this, especially big short-term dips, are one of the highest signal insider trades for sure. And we've got big holdings increases. We've got multiple insiders doing it. We've got this huge dip. The problem here is you really want to be able to craft a story for why the stock might be turning around, why this dip might be being bought. Some sort of, maybe it's just a short-term headwind, maybe it's an overreaction because people misunderstood some data. Maybe they're unlocking a new growth engine, that's going to show up in the next couple quarters or whatever. CarMax, unfortunately, doesn't really have any of that. Their stock is just, everything about it is kind of heading in the wrong direction. Earnings taking a big hit. You've got the stock price obviously going in the wrong direction here. If you look through their earnings calls, just nothing I mean, there's like no sales are way down, retail unit sales are down, average selling price is down, the gross profit per used unit is down, the wholesale unit sales is down, gross profit per unit is down, vehicles bought are down. I mean, everything. It's just nothing really going in the right direction here. And then on top of that, you have obviously just general macro concerns about, potentially weakening customers and stuff. So if you could convince yourself of a story here for why CarMax might be turning around, then maybe, then these insider trades get interesting. I just think the story is so bad, it totally, override any potential interest from the insider dip buying here. However, this company has gone through it, it is a fairly cyclical company. So historically, maybe, kind of goes up and down. It obviously peaked sort of there at the end of 2021 and it hasn't been nearly as good since then. Let's go look at valuations real quick. We can see valuations still not even that cheap. I guess depending on what you want to use, maybe PE might make the most sense here, in which case, it's getting down there a little bit. So, but there are obviously concerns just about earnings going to start to fall off a cliff here a little bit, depending on how the consumer goes. So overall, I'd say I can't paint a story about why this is a great play right now. At some point, maybe things turn around, but we'll deal with that point when it comes. For right now, dip buys we do like. In this case, don't really like them. And then let's also look at Sportsman Warehouse. This is one that's just the insiders keep buying, which makes me kind of come back and look at it. But the story, again, I'm just not a huge fan of. In this case, a pretty massive insider buy by a director here. Also his first ever insider buy, which definitely steps up the intrigue because we had these two guys who I believe are the CEO and a director. So there's a CEO. Then we've got the director here. Also bought the stock back here. And then you'll see their names pop up quite a bit. Stone and Maccabee. We've got Stone and Maccabee. We've got Maccabee. We've got Maccabee. We've got Maccabee. Looks like Stone hasn't been around as long. But so they've purchased quite a bit. None of their returns are particularly great, if I recall correctly. Maybe some short term are okay, 1 month and 3 month, but 6 month and 1 year get quite a bit worse. Same story probably here with Paul Stone, I guess. I mean, kind of all over the place. There's nothing you can really, I wouldn't call those particularly high signal insider purchases. Also not really buying a dip. I mean, I guess over 2 years it's down quite a bit, but that's sort of a long time period to just now be paying attention. Like there's been consistent buying basically over that period. So I don't know why you would consider right now necessarily a dip buy. So in this case, this is another one where it's just, I don't know exactly what the story here is. If we go try to look at some metrics here, it did pop up above the 200 day, which, I'd be interested to see, did any news come out or anything on June 2nd? Maybe it was just their earnings or something. Or like early June. Yeah, so just their earnings were pretty good. So I guess that is something to consider, is that they had some nicer earnings going on, which if we look at their summary here, you can see sales moving in the right direction, which is good. Second consecutive quarter of positive comps, which is good. Margin is good. SG&A went up due to reinvestment in store labor. Maybe not so good. Adjusted net loss improved. Adjusted EBITDA improved. Inventory is up, which, depends, I guess, on how sales go in H2. But overall, probably, obviously a pretty good firearm sales going up, a pretty good earnings call overall. Added one store. That obviously caused the stock to start going up there. And now we're seeing this insider buying. So, hey, maybe we continue to see this story turning around. The only problem to me really is we're just not looking at a particularly inexpensive company here. I mean, no earnings, EV/EBITDA at a pretty high, maybe low on their sales, but that's kind of because they're not making any money. So I don't think I would qualify this company as particularly cheap. Their quarter is also probably not over until the end of October here. So we've still got a couple of weeks on the quarter. So I wouldn't say these insider buys aren't with the quarter info already baked. Not super cheap. I also just don't know. I personally have some overall concerns about some of these consumer discretionary companies and how much the macro environment is kind of going to hinder them, in the near term. So that's obviously also a little bit of a concern. The only stories I can think of obviously are just, if you believe for whatever happened here in Q2 or I think it's their Q3, but whatever happened on these June earnings calls, if whatever that was, is going to bleed through and continue on after this, which actually they should have had another earnings call since then, wouldn't they have? So that was actually a different earnings call. This is the earnings call that actually got it to go up. Net sales were barely up, margin was improving, SG&A is disciplined, net loss actually widened, adjusted EBITDA slightly worse. So, this quarter, the more recent quarter looked a little more interesting, but why did they say again here? I guess just because of net sales increasing. I don't know why exactly. Reported a adjusted loss late Tuesday of 41 cents compared to 40. So I guess they're losing a little bit less money and net sales were up a little bit. So people seem to like that, but it does seem like their earnings have maybe been going in the right direction. You might think that's going to continue. They do also have a lot of gun sales, which, you know, depending on how you feel about the political environment, there could maybe be an argument for some tailwind in the gun sales. But overall, I'd just like an easier setup to me than this insider purchasing. I don't think the insider buying was a huge signal by itself, and the story is not strong enough to make it more interesting there. So I think that for the most part is most of the interesting purchases. Let's take a look at sales. Then on the sales, we're going to see a lot of the stuff that we've been seeing. So we've got that Howard Lutnick sale we looked at. One big note here is that Fluor Corp, however you pronounce this company's name, has now sold their entire NuScale position here, NuScale Power, and we have seen a ton of selling at these power companies. I do think they're getting very, very expensive. Obviously huge tailwinds with the AI data center stuff, but getting very expensive and starting to see a lot of selling. And so as we can see, they've sold every single one of their $600 million in shares in just the last couple of weeks, which, you know, trying to time a short on one of these type of companies is tough, but I do think it's notable we're starting to see all this insider selling. And then we're going to have bunches of 10b5-1s, CoreWeave selling post-IPO, SLTA has been selling Dell for quite a while now. Another one here where these sales are all part of I don't remember if this was an IPO or if this one was a public offering. Let's take a look. So this one, all this selling is part of an IPO. So again, not super interesting. Jensen continuing to sell Nvidia, which we've seen quite a bit of. Obviously, a lot of insiders selling it. Nvidia hasn't really slowed the stock down at all. But overall, there wasn't anything that really stuck out this week about the insider selling, except for, you know, Fluor Corp's getting out a NuScale Power. So you can head over to CEOWatcher.com to find all of the insider trades for yourself and take a look through those. Don't forget to like and subscribe, and we'll see you next time.